I'm going to record. Glad to see you. Happy Monday. Going to start off asking you if you might have any exam questions other than what's on it. 50 questions, you'll have 150 minutes. That's 2.5 hours to be completed by midnight. So that means if you start at 9:30, you'll have the full 2.5 hours. If you start at 11, you'll only have an hour. If you start any earlier, you'll be in good. Should not take you that long, but it might be close. So you want to make sure you're ready to hit the ground running once you start her up. And once you start the exam, there's no turning back. Any preliminary questions? All right, so we're going to proceed with inventory, chapter 5. We're going to be talking, how many have actually heard the term LIFO or FIFO before? Does that ring a bell? Last in, first in, oh, I can say this right. Last in, first out, first in, first out. Let me ask you a question. I'm going to go into the chat, into our screen. I'm going to share. And I'm going to have you in the chat respond to the following. I go out and buy, and let's start with on January 5th, X1, buy 10 gallons of milk at 75 cents. And then on January 12th, X1, I buy 20 gallons of milk at $1 a piece. I sell 1 gallon at $2. In the chat, what is my gross profit on that 1 gallon? Give it a shot. So I buy 10 gallons of milk, 75 cents. I buy 20 gallons at $1 a piece. I just sell 1 gallon for $2. What's my gross profit? How much do I make off that one? Go ahead, I've got one in the chat so far. Give it a shot. This is your attendance question, among other things. I know more than one of you has an answer for me, so please type in the chat so I know you're here. You're not being graded on the answer, other than you're being made aware of the answer. I got 2 answers. I know there's more than 2 in the class. Come on, we can do this. Now, most of you by now are probably going to guess, is it $1.25? Or maybe it's $1, or maybe the answer to most of my questions in this class is what? It depends. So it depends on what is going to be my question. Because you're right, I got my selling price minus my cost of goods sold or cost of sales equals my gross profit. Now I've got 2 numbers I can work from. I can take $2 minus 0.75 or 1.0, and I'll get 2 answers here. I'm either going to get $1.25, which most of you seem to like, or $1. So the quick answer is, it depends if I choose LIFO, last in, first out, or FIFO. So what does that mean? Well, my first ones I bought in January, I bought 10 gallons here. And anything I sold on January 6th or January 7th is going to be from that batch because I don't have my January 12th batch yet. But on January 12th, I bought 20 more. Now, if we hide those in the back and we have to sell these 10 first, you are right. We'll make $1.25. But if you, I know about you, but when I'm buying dairy or eggs or cheese, I actually reach in the back of the case and find out the latest date, because I don't know if it's going to sit in my fridge for 2 weeks, 3 weeks, 4 weeks, or just 2 days. I mean, there are 3 of us in the household, and sometimes it goes pretty quick, and sometimes we're cooking something, and sometimes it lasts a couple of weeks. So I don't know, I'm gonna get the freshest I can. So I might buy on a LIFO basis, even though I can calculate on a FIFO or LIFO. So let me ask you the question. One more chat question. Which would you rather have? Profit equal to $1.25 or $1? Go ahead in the chat, go ahead and type that in for me, please. And then I'll give you my answer, which might surprise some of you. Oh, I like the depends. I like that. Why would you say it depends? That's my answer too. You say, wait a minute, $1.25 sounds a whole lot better than $1, doesn't it? Well, let me ask you the question. If you're a small business person, you're an entrepreneur, and you sold 1 gallon of milk and you could show a profit of $1 or show a profit of $1.25, which would you rather pay taxes on? Would you rather pay taxes on $1.25 in profit, or would you rather pay taxes on $1 in profit for selling the same gallon of milk? So if let's say we're average tax 20%. So on $1 profit, we're going to do 20 cents in taxes to the IRS. On $1.25, we're going to pay 25 cents in taxes. The entrepreneur in me says, I'd rather pay 20 cents in taxes on the same gallon of milk I sold to pay 25 cents. On the other hand, if I'm an entrepreneur and I'm planning to sell my business at the end of this year, I'd rather show my buyers that I made $1.25 than $1. It's 25% more. I'd rather show myself as much more profitable. Or if I'm a publicly traded company, I may want to show my stockholders how wonderful a manager and wonderful a CEO I am, and I made them $1.25 instead of $1. Now add some zeros to that, you're going to start talking some really serious money. So we look at that and we say, okay, I'm getting the hang of this it depends thing. Yeah, as an entrepreneur, I like the $1 better too. But again, if I'm going to sell the business, I like the $1.25 better. So we got to think about that as we make decisions on how we handle the flow. Now let's talk about LIFO, FIFO. Again, if it was a last in, first out, this is what I'd be using is, let's go and stamp this. LIFO says, I'm going to use the last purchases. I'm going to sell my $1 gallon of milk and I'm going to make $1 gross profit. If I'm on a FIFO basis, I'm going to sell my 75-cent gallon milk and make $1.25 profit. But I need to be consistent. I can't do LIFO on Monday and FIFO on Thursday. I'm going to pick a method. I'm going to stick to it. So I look at this and I say, okay, I think I'm getting the hang of this. So this is on a FIFO basis, what I'd sell. And this is on a LIFO basis, what I'd sell. In the chat, please type in the following, FIFO or LIFO for my next question. Is my physical flow desired FIFO or LIFO? Do I want the flow of goods at the grocery store, if I'm Walmart or Piggly Wiggly or IGA, do I want it to be FIFO or LIFO of goods going out the door? Go ahead and type in the chat, FIFO or LIFO, please. Get some decisions based on FIFO. I'm getting this, do I see any LIFOs there? I got probably FIFO. No, this one's not in it depends. It's either FIFO or LIFO. Well, actually, it could be it depends. There may be some other reasons, but 99.9% of the time, grocery store is going to be FIFO. First in, first out. The January 5th stuff comes in, the January 5th stuff goes out. The January 21st stuff comes in, the January 21st goes out. And they're going to hold that on a rack in the back until all the January 5th stuff is sold. Does that make sense? So the physical flow may or may not, and actually really has no relationship to the actual flow associated. So I'm going to show another picture here. And I'm not trying to gross anybody out. But take a look. If you go over to view and you say view the speaker, speaker view, you will see FIFO and LIFO in action. So on the right, you will see LIFO, last in, first out. The last stuff to go down is the first stuff that comes out. Where the picture on the left is first in, first out. I'm sorry, is first coming in, and then it goes through the system, and there's the first to go out. You eat something else or drink something else, it comes through the system, and it goes out. Again, I'm not trying to gross you out here, but I am trying to give you a perspective on what LIFO and FIFO really mean. And if a graphic image is going to help that visualization, figure it through, understand what LIFO and FIFO is all about, then mission accomplished. Any questions on the actual flow and understanding what FIFO and LIFO are about? Is that kind of making sense as we go into this? Okay. So we're looking at FIFO, we're looking at LIFO, and that's going to be the flow of goods of what's going on. Okay. Actually, the quote that you see right now in my background, if you think you can or you think you can't, you're right. In the chat, if anybody knows that, go ahead and put who the originator of that quote is, if anybody knows offhand. Think you can or you think you can't, you're right. Power of positive thinking, that's not the Dale Carnegie stuff. Anybody know? I wish it was me, but thank you for the compliment. I'm posting it. Henry Ford, very well said. Well done, Jackson. Henry Ford did the original quote, if you think you can or you think you can't, you're right. And there's a lot of truth in that. So I'm trying to just give you something to think about. All right, so we're looking at FIFO, we're looking at LIFO. I'm gonna now wanna go in and talk a little bit more about inventory. And we'll get back to FIFO and LIFO a little later. So you realize that there's significant impact on how we calculate or how we value our inventory. Now there's two others. We'll talk about specific identification, specific, like if we're selling cars or diamond rings, that car I sold and this car is what would cost me, that makes sense. I'm not gonna average things. Or average cost. I got a whole bunch of boxes of cereal in, I got some more in, I got some more in, and what's gonna happen, I'm gonna average those costs and I'm gonna sell. And we'll talk more about those later. We'll get into those more in the next class. But I wanna go through a calculation process with you. I'm gonna have you all go into groups and we're gonna be calculating using Edgar. We're gonna go on the SEC's website, look for an American publicly traded company, could be a retailer, could be a wholesaler, could be a manufacturer, one that ideally has inventory. We've talked in the past, not all companies have inventory. Airlines don't really have inventory because they're not selling you planes. They might have a little bit of inventory of food and some other things that they may be selling, but hotels don't have inventory other than their restaurants. The rooms are being rented to you. They're not selling you the rooms, they're selling you use of the rooms. A TV or radio station sells ad space. They call that their inventory, but that's not going to be a cost of goods sold that you're going to find on an income statement. So think of a company, maybe clothing, maybe manufacturing, maybe hard goods. Think of a company that actually does make something or sell something, and we're going to calculate inventory as a percentage of total assets. We're going to see how significant that is. And I'm going to do a demonstration. Anybody know who the largest tobacco maker is in the world? And you can shout it out on the speaker. You can unmute or you can pop it into chat.
Cope.
Yeah. What was that, Jackson?
Cope.
Cope.
Copenhagen.
Actually, Copenhagen, cigarettes, biggest tobacco manufacturer, Philip Morris. Okay, they go with the ticker symbol PM as an AM and PM. So I'm going to go through, I'm going to walk you through what I'm expecting you to be able to do in about 5 minutes. So I'm going to go through, I'm going to go over to my Chrome, and I'm going to go over to Edgar. So we're going to do a Google search for Edgar. And when we search for Edgar, it's going to come up sec.gov, Edgar. I'm going to click on that. By the way, there is a tutorial on this if you're going to use this for your projects too. I'm going to do search company filings. So I'm going to look at the financial statements. All publicly traded companies are stored here. We've been here before. And I'm going to go by company or fund name, ticker symbol, central index key. So I click on that and it takes me over to a lookup, a search window. And I can type the ticker symbol here. I can do PM if I know it. Or I can start typing Philip Morris, P-H-I-L, make sure I spell it with one L. Philip, there's a Phillips and V. Again, I think that's energy, yeah, pretty big. There's Lee Phillip, Gary Phillip, but I'm looking at Philip Morris International. Here it is, PM. So I click on that. And then I have to go to filing type. What filing type? We're looking for the annual report, not a quarterly, not a 10Q, but an annual, a 10-K. So make sure to type in 10-K to get our financial statements. And you'll notice I've got a 10K ending February 21, February 20, these are the filing dates, February 2019. I'm going to go to interactive data. That's where we're going to find our financials. And then when I get there, what we've done in the past, we jump to view Excel document, and every tab is a different financial statement. Pretty cool. Statement of operations or income statement, balance sheet, whatever it might be. But I'm in this case going to go to financial statements. So let's go to financial statements. And I can't find the income statement here, but I do find my statement of earnings. Oh, let's see, let's take a look at that for a second. Oh, that has revenues, net revenues, cost of sales, gross profit. Oh yeah, this looks like an income statement, doesn't it? But that's not where my inventory is or my assets are. That's on the balance sheet. Let me go to comprehensive earnings. By the way, comprehensive earnings starts with net income or net earnings. This is not your income statement. Some of you will have a statement of operations and a statement of comprehensive income. And many of you will jump to, oh, that comprehensive income, that must be my income statement. And it's going to start with net earnings and have adjustments for gains and losses on currency translation, comprehensive earnings, other stuff. That's not what you want. You're going to want the statement of earnings or operations or income statement. But here I'm looking at a balance sheet. And on my balance sheet, there it is. It starts with assets, then it goes to inventory, then PP&E. And I'm looking at this, I'm saying, what's my total inventory for Philip Morris? And if someone tries to go down here and say, oh, there's my total inventory, $9,591 total inventory. Well, Philip Morris is a pretty big company. Up here, it says in millions. So I would say I'd have to add 6 zeros to this. So I got $9.6 billion in inventory. Think about that, $9.6 billion of inventory. Where do we put all that stuff? It's expensive to hold on to it, but we'll go back to that in a minute. So we get 9591. I'm actually going to go over a spreadsheet that I'm going to share with you, and I'm going to put in here Philip Morris. And that's my name, Dr. Scott. What did I say the inventory was? 9591. I'm not going to put all the zeros in there, but just realize it's 9,591,000,000 in total inventory. I go down here, I've got total current assets of 21.5 billion. But be careful, you want total assets, not total current assets. Current assets is only the current stuff, receivables, cash, inventory. We want 100% of the assets, 44,815. So I'm going to put 44,815 here. And I'm going to calculate my percentage. I'm going to have equal left arrow, slash left arrow divides T25 by D25. And I'm going to come up with my balance sheet is 21.4% inventory. Either of those are pretty big, 21% of $45 billion or almost $10 billion of tobacco leaf inventory. So I'm going to have you each individually pick a company. I'm going to put you in groups, but if you're in a group of 2, I want 2 answers. If you're in groups of 3, I want 3 answers, but we can work together on doing this. But before we go there, I have one more question to ask you. I'm going to give you the link to that. Actually, I'll give it to you right now. Link here, I'll put it in the chat. So you'll have this link in the chat that you can link to the spreadsheet. And I'll put that in there right there. So it's in chat right now. You'll have that when you go to your chat rooms. But my next question is, and I'm going to round the numbers. Let's make life easy. I have roughly $10 billion of inventory. Okay. So if you look at that, I have $10 billion the B. Let's say that Philip Morris had to borrow $10 billion to pay for it. They had to go out, issue bonds and say, all right, $10 billion. In the chat, type in what is 10% of $10 billion? Please type in the chat. Is this still your attendance question or a question, one of your attendance questions? What's 10% of $10 billion? Shouldn't need a calculator for this one. Got one answer so far, looking for a few more. What's 10% of 10 billion? 10% of 10 billion. Well, just move the decimal over one. That's 0.1 times 10. What's 10% of 10? Well, 10% of 10 would be one. Not 1 million, but $1 billion. So that's $1 billion in interest expense, not 1 million. So if we have 10, I'll put the zeros in there for you, 10, 0, 0, 0, million, $billion in inventory. 10% of that is $1 billion. No, you're not used to working with billions, so I'll forgive you the million faux pas. Even if the interest rate was 5%, that would be 0.5 billion or 500 million in interest expense. Do you think Philip Morris would like to have an extra $500 million to $1 billion in profit? Maybe not have to pay for their inventory, have zero inventory. Maybe if they cut their inventory in half, they'd save either $500 million or $250 million directly to the bottom line, directly to the profit. Does that make some sense? All right, I'm going to do a quick roundtable. I'm going to ask you the following question. What other expenses do you think might be associated with inventory? It's not just interest expense. We're going to do a quick roundtable. If I've got inventory on the shelf or stored somewhere, or I've got inventory I'm stocking, besides interest expense, what other expenses might I have? Well, I'll ask you to unmute. I'm going to go around. Herbert, take it away. What other expenses might I have associated with inventory?
I'll say like taking care of it, depending on the type of inventory the company has.
Okay,
like
taking care of like maintaining it, like in tobacco leaf. What kind of maintenance would you need on tobacco leaf inventory, do you think?
For that, you would need to make sure it was dry, not too wet. So you would have to have drying houses. Then after it dries out, you would have to then get people to like take it off the rack, so employees and stuff. Okay,
cool. So you have humidity control, you have racks you got to buy, you have people that have to process it, maintain it. Dalton, take a shot. Anything else you can think of?
What came to mind to me was transport, and also maintaining those, like, let's say trucks and containers that are needed to transport all those goods.
Oh, good call. You got to get it there. You got to get it out of there. You got to move it. You probably have forklifts inside to move it around and move it from place to place and stack it and pack it. Good to go. David, you want to take a shot?
I would say like rent or lease on the warehouse, and then also insurance.
Oh, both are excellent. So you got to you need to rent something or own something. And then you have this prepaid insurance we've been using before as a prepaid asset. We got insurance. What would happen if all that $9 billion went up in smoke and nobody was smoking it? I mean, it wasn't meant to, right? We'd lose a whole bunch of money and we'd lose a lot of business because we have all that stock going around. Jackson, you want to take another shot? Anything else?
I don't know if it was kind of falls under humidity control and stuff like that, but just like storage spaces, just places to have like the paper where it's manufactured, to wrap the tobacco leaves in, to produce the cigarettes or whatever the case may be.
Cool.
Just
So
like a packing plant or something.
Not just the tobacco leaves we got to worry about, but we got the rolling papers or whatever other materials, the nicotine that we're injecting, and the arsenic that we add, whatever other chemicals we're adding to our cigarettes. Not that I'm trying to turn you into smokers, but I just want you're pretty aware of what that's all about. Ray, you want to take a shot? Anything else you can think of?
Interest
expense. pretty heavy stuff, $500 million to $1 billion. That was a lot of money, isn't it?
Mhm.
Antonio, you want to give it a go?
What about like the farmers? Like making sure they have everything in line, like
So
everything.
the farmers have to store it and get it moved and get it and packaged and transferred over to the warehouses. How the farmers are handling this stuff too. You got it. Alexis, take a shot. Please unmute Alexis. Alexis, are you alive? In case you're not here. Or
Yes, sir. Sorry, I'm having some technical difficulties over here. It's pouring down raining in Marion, and the Wi-Fi keeps glitching.
Gotcha. Okay, thank you. I'm glad you're here. So you understand my question. What other inventory costs do you think would be associated with maintaining $500 million or more? I'm sorry, $10 billion worth of inventory. Anything else? We've talked about shelving. We talked about rent, insurance. Anything else you can think of? We're getting down to the wire.
Equipment.
Go ahead.
Equipment.
Equipment. So we might have drying equipment. We might have processing equipment, machinery out there. So we got to store that. We got to maintain that. That's more fixed asset stuff, but it is associated. The more inventory we have to process, the more machines we'll probably have to get to process that inventory. Good point. And Jaden, don't want you to feel left out. Want to take a shot?
Transportation, like from the warehouse to where they're being delivered to. Like,
Excellent. So transportation, we got to move it around. We got to deliver it once we prepare it, package it, and ready for shipping. Some other things on the off shot, we got security guards. We got folks running around, and we have all kinds of other employees that are out there. We got people that have to count the inventory. We have accountants that have to go out and work it. We have accountants that need to monitor the flow and track the detail going associated with that. So these are all things we need to think about when it comes to inventory. So it's not just the interest expense, but it can be pretty significant. And again, not all companies have inventory. We talked about the airlines and the TV stations and the radio stations and the banks. They sell money. We don't make dollars in inventory, even though that is officially their inventory. But a lot of folks that have to handle inventory, this handling gets expensive. I had a math major in my last year calculate that we would have to build a warehouse from here, the FMU campus, all the way to MUSC Hospital to house $10 billion, $9.6 billion worth of inventory. That's a lot of space. That's a lot of building. That's a lot of construction. Now we got building maintenance crews. We got folks that need when the roof needs to be replaced. All right, we got a lot of costs going into this stuff. We cut our inventory in half. We need half the space to do it. We won't be able to maybe make as much. We may not be able to produce as much. We got to monitor our inventory. And we'll talk more about that next class. We want to think about inventory and what it does for us. Okay, I'm going to go ahead and split you into rooms. And I'm going to put you into 4 rooms. I'm going to have you go ahead and each one of you pick a company, go into Edgar, go to the 10K, go to the balance sheet, and again, go to that spreadsheet that I put in the chat and fill in a blank. Put your name next to it, your company. You have your classmates that can help you if need be. So I'm going to have you go at it and take it away. So let's go into breakout rooms. I'll divide you 3 to a room. And any questions before we go? On our way. See you shortly. Are you not, Alexis, are you not able to get into a room? Guys good?
I've got my company done.
Okay. Ray and Antonio, any questions? And they actually guys work together. If any of you are having trouble or asking.
Yeah, I'm on Edgar now.
Okay, cool. All right, I'll bounce over here.
It's very possible that Chick-fil-A may not be a publicly
Yeah.
traded company,
It's
so
not
you
on
may
there.
not
Yeah.
be able to find it on there.
Yeah,
Just,
the key is it has to be US publicly traded. Somebody tried Adidas last time and they're a German company. They're listed on the exchange, but they don't have a 10K that they list. Honda has similar problems. So it has to be American publicly traded company. Kohler won't work.
I know Ford's on there if you want to try that. Ford Motor Company.
Sunoco is local. They'd be an interesting company too. Any retailer, Kohl's, Belk, any of those. Some ideas. See you shortly.
yes, sir.
Okay, gotcha.
Good to go.
Hello.
Just be aware that the company on Edgar has to be United States publicly traded. Last class, somebody tried Adidas. Great German company, but they don't have 10K listed on Edgar. They're listed on Edgar because they do some investment, or they attract investments, but they don't have their annual report there. Honda would be a similar problem.
Is Tesla good?
But SC Johnson and Kohler are private companies.
Is Tesla good to use?
Tesla's publicly traded, sure.
Okay.
You'll be able to find Tesla, yep. All right, I'm gonna bounce out and I'll see you shortly.
Yes, sir.
Doing.
I'm trying to search where in the Edgar, the website, where to go in order for us to get to the.
So if you search Edgar in Google, it's Edgar
Mhm.
TC. And when you go there, you go to company filings.
Company filings.
Filings, you go to 10K, 10-K, and then you go to financials. And Alexis could probably help you do that. I hope. You want to show me your screen, Dalton? We'll walk through it.
No, I've gotten to the 10K section. It was just getting started that I was having trouble with.
And by the way,
we-
be careful. Edgar only has US publicly traded companies. I had somebody in last class try to do Adidas. Great German company, but you're not going to find their 10K on Edgar. They're actually listed in Edgar, but they don't do their annual filings here. They have some bond and other investments. If they're privately held, if they're like a Kohler, or if they're an SC Johnson, you're not going to find them either because they're not publicly traded. Sunoco is publicly traded. They're local and they're pretty major. Walmart, Belk, Kohl's, General Mills, Kellogg's, they're all publicly traded. So go ahead and find those. Add to the spreadsheet, please.
Understood.
See you soon.
So Alexis would like to do Walmart and Belk because those are the two that he mentioned.
Yeah, that sounds good.
Like it was starting to get a little, I guess, a little bit colder for South Carolinians. And like my mom was like, "You need to buy a jacket." I'm like, "I am not buying a jacket. Like this is fine."
I don't know if you
Really
Jack, just saw
snowy.
this one. Have you added to the spreadsheet, please? Make sure you add all three of your companies to the spreadsheet.
Yes, sir.
Yes, sir.
Thank you. See you soon.
Yes, sir.
I need a jacket too, yeah, but it's okay.
Oh yeah, that's it. That's inventories right there.
Okay, so that's the total right there, or the
Yeah, so 10808 is going to be in your first cell after your name.
Now
And then
make sure you
your
get them on the
next-
spreadsheet.
And then your next cell after that, you
Then the filing type in 10K, so 10-K, 10-K, excuse me.
Thank you.
Hang of that. Make sure you get that on the spreadsheet, by the way. So I'll bounce out of here, but just saying hi.
Okay. Okay, so does it matter which one, or like, do I pick like the most recent one, or? Okay.
I'm not sure if you're asking Dalton the question or me, but I bounced out as you were saying. Most recent one, just 1 year, the most current year. That's what we're looking for. Does that make sense? The annual. For
Okay.
some
Yes, sir, it does. Yes, so,
an annual. You just want the
because
annual.
it's like, okay, because it was just glitching during the lesson, so some of my stuff wasn't. That's why I have my video camera off, so it would work better, and it's still kind of glitching.
Although you probably want to go to financials if you go back a screen rather than your detail report, the filing details. So once you type in 10K, the interactive data is probably where you want to go.
Okay.
On the just to the right, that blue.
Okay.
Instead of, there you go. Because interactive, and when you go to interactive, you'll not get the chance to go to financials or notes to financial statements or anything else. So if you look on the left where it says financial reports, that's where you're going to click on.
Financial statements.
Financial statements, yep.
Consolidate balance sheet. Okay.
And now what we did in class, we
Okay.
view Excel document, but here you're just going to go to the income statement. Either the statement of the balance sheet or consolidated balance sheet, not parenthetical balance sheet. The balance sheet will be listed. There it is right there.
Okay.
There's inventory, there's total assets, all the stuff is there. Okay.
Okay. Thank you.
Oh, you're very welcome. Have fun, but not too much. Welcome back. Coming back together. So let's go ahead and take a look at our spreadsheet. And if we're looking at Tesla, about 8%. That's still probably $4 billion worth of inventory. Only 8%. J&J, they get the new vaccines coming out. 5%. Sunoco, 8.5%. Philip Morris was high at 21%. American Eagle was 13%. Walmart was 19%. Thank you for the last class. Under Armour was 18%. Nike was 23.5%. Even more than Under Armour, even though Nike's more popular. See, so you know, more inventory is not necessarily a good thing. But less inventory is not necessarily a good thing. So go ahead and unmute. Let me ask you that question. Why would more inventory not be a good thing? Anybody, go ahead and unmute. Let's talk about it.
More stuff that you have to keep track of, meaning more expenses too.
More expense, more stuff to keep track of, more stuff that can go bad, more stuff that can get ripped off, more stuff that can break. Just more stuff. Good answer. All right. So if more stuff is bad, why would less stuff be bad?
Too
Not
low
as
Might not have enough.
if you don't have enough for the demand.
If you went to buy a gallon of milk and Walmart was out, you're going to go over to IGA and go pick it up, and you're not going to get, that's a lost sale. Matter of fact, 2-3 years ago, Walmart had major inventory tracking problems. And they lost sales because they didn't have stuff on the shelf. If you went to a shoe store and they only had size 8 shoes with nice low inventory, but if you weren't a size 8, you weren't buying. That makes sense? There's something called just-in-time inventory we'll talk about later. It was kind of introduced something called Kanban, Japan, that when Toyota makes 100 cars, they say, tire manufacturer, we need 400 tires. Have them on our loading dock at 5 a.m. tomorrow. And that's just-in-time inventory. But if the guys went on strike that made tires, they weren't producing any cars. They had no stock of tires. So let's go over and introduce a couple of slides before we part company. Any questions on this inventory stuff? Are we making sense? Inventory is pretty important, obviously. It's also often pretty significant, not just in the cost of the inventory, which usually has to be financed. You take out bonds, you go to the bank and borrow debt, but it also in maintaining the inventory, in keeping it, and turning it over, and keeping it in working order, and planning for obsolescence. If you have too many computers in inventory, as you probably know, the day you bought those computers and had them delivered to the retailer, Best Buy knows they're obsolete. You hold on to them for 6 months, they're more obsolete. You hold on for 2 years, you'll be lucky to get half the money out of them. So you got to be careful on the inventory, the stocking, and all that stuff kind of works. Are we on the same page? So let me go through, and I want to go ahead and get an idea. Next here. A couple of slides I do want to go through on inventory. Now, we talked about this last class. Just because you have it on the shelf doesn't mean it's yours. And just because it's not on the shelf doesn't mean you don't own additional inventory. So just because you take a physical count, by the way, I used to love inventories. That was my favorite thing to do as an auditor. The timing was pretty lousy. You have to go out there Christmas Day or New Year's Day and do counting of stuff. But I really got to see, I love business. I got to see how a business operates. A liquor distributor, I didn't realize how many kinds of beer and wine there were, not to mention how many kinds of vodka they had. Or a manufacturer, I could see the raw materials. I had a amplifier manufacturer called ACT. They made tube amps, even though solid state circuitry was in, because tube amplifiers had much better quality sound, almost like turntables than electronic music. But what happened, or than the MPEG files, MP4 files, MP3 files. But the quality was higher, so I get to see the components, the pieces and parts, the work in process, and the finished goods that they made. So you get to see how a business operates through their inventory. So we've got things like goods in transit. We called FOB. We talked about that last class. And it'll be on your exam tonight. But we're looking at free on board, shipping point, free on board destination. Who owns it? That's the definition based on free on board. Goods on consignment. Clothing stores often have goods on consignment. You bring clothing to them, they put it on the shelf. They don't own it. It's still your clothes. They didn't buy it from you. But when they do it, they'll pay you a commission on what they sell. And then there's damaged or obsolete goods that end up on the shelves. So we talk about if it's FOB shipping point, the inventory is included in the buyer's inventory as soon as it's shipped from the supplier. It's free on destination. The goods are included in the buyer's inventory after it arrives at destination. Until then, it belongs to the seller. That was the FOB. We have goods on consignment. The consignor owns the goods. You might bring the clothes in. You're the consignor. The consignee sells the goods for the owner. Pepsi does this all the time. All the Pepsi on the shelves and most of the grocery stores you go to is owned by Pepsi. Bread manufacturers do the same thing. Wonder Bread, they maintain the shelves at the supermarket. They own the bread until it's sold. They get credit for it, but it belongs to the consignor or the owner, not the consignee, the grocery store. So you might count the bread on the shelf as a grocer, but that's not your bread, so that's not your inventory. The consignee never reports consigned goods as. And finally, damaged or obsolete goods. Damaged or obsolete goods are not reported in inventory if they can't be sold. We're going to talk about lower of cost to the market. What's a computer that's missing a CPU and missing a power supply worth? Not a heck of a lot. Doesn't work. It's worth something, but it's not going to be worth the full price of a computer. How about if it's broken and you don't know what's wrong with it and you can't sell it? Well, it's not worth what you paid for it, most likely. Damaged or obsolete goods which can be sold are included at NRV, net realizable value. How much can we get for this broken computer or this computer that doesn't have a power supply or CPU? I'd buy it if the price is right, and then I'd have my own CPU and power supply, and I got a working computer. It's got the RAM, it's got the circuit board, it's got the keyboard, it's got the screener, maybe it's a laptop, it's got the monitor, whatever. And net realizable value, selling price minus selling costs. And you do record a loss when you discover the damage or the obsolescence. So if I paid $1,000 for a computer and I realized it only had a NRV of $300 and it was going to cost me $100 to sell it, I'm down to $200 valuation. I'd have to write off that $800, and I would take that as a write-off. Even though I hadn't sold it, it lost value. So to accurately reflect my assets, I'm going to be recording it and saying, you know what? I can't get what I thought, what I originally paid for, or what I was going to get for it, because it's not in a saleable state as a finished good, but I can sell it for something that has some value to it. So that's going to be something. On that note, I'm going to ask if you have any more questions. Any concerns, thoughts, dreams, ideals, philosophy, goals, desires, wants?
The test is on Connect, right?
Test is on Connect or Blackboard, can access either. And you'll have 2.5 hours for the 50 questions that are there. But again, you're going to need to know your stuff. You're not going to have time to be going through your notes and your books and trying to figure this all out. Yeah, I did say it was open book, open notes, but be aware that you need to understand the concepts to be able to effectively do the exam. Because if you're taking time to answer the questions, having to look things up, you will run out of time, without a doubt. Thank you for asking. Other questions, comments? And I wish you well. I look forward to seeing you next class. Good luck on the exam. I'm available if you have further questions, let me know. Have a good week.